And now post-lunch, it's time to take a deep dive into a very important sector for the Indian economy, and that is insurance. Insurance, ladies and gentlemen, is more than a financial product. It is a pillar of economic security and social resilience. Our next session for the summit is titled 1 Billion Insured, Cracking the Real Economics. And to take this very important session ahead, let's invite our esteemed panelists onto the stage, starting with a seasoned insurance leader, someone who brings with him deep expertise in risk, financial protection, and building resilient insurance solutions for the rapidly evolving India. Ladies and gentlemen, let's welcome MD and CEO of ICICI Lombard General Insurance, Mr. Sanjeev Mantri. Thank you, Mr. Mantri, for joining us. Joining Mr. Mantri on the panel is Managing Director and CEO Go Digit General Insurance, Ms. Jasleen Kohli, a dynamic leader in the insurance space who brings a strong focus on innovation, accessibility, and customer-centric financial protection. Thank you, Ms. Kohli, for being with us today. And to moderate this conversation, ladies and gentlemen, let's welcome onto the stage the editor of Outlook Money, Ms. Nidhi Sinha.
Hello, everyone. And this session is about insurance, and we were just talking that, why insurance is often not included in conversations. But here it is, and I think it's very, very important, and all of us agree on that. One of the things that I want to highlight at the outset is that insurance right now, its contribution to the GDP is very, very low. So it's, the latest IRDA report shows that, insurance penetration in India is just 3.7% of the GDP, which is almost half of the global average, which is 7.3%. A more concerning factor as an Outlook Money editor, where I, usually deal with retail investors, is also insurance density, which basically deals with investor awareness and household coverage. The data there is also abysmal, because it is about $97 compared to $943 of the global average, which is almost a 10 times gap. So keeping these numbers in context and the government's vision of insurance for all by 2047, my question is whether it is achievable and what will it take to crack universal coverage, and all the stakeholders, are they moving fast enough for that? So today I'll be brainstorming with my esteemed panelists, but before I dive into the discussion, I would request them, if they want to talk about the topic for a minute, to just introduce us and give a context.
Sure. So thank you so much, first of all, for making insurance a topic. It's supposed to be complicated and boring, but we are glad that you've included this in the summit. So my opening views here will be that when we speak about 1 billion insured, it's a very powerful statement here. I think it's more important to fix the real economics rather than looking at the headline ambition here. India needs products which the consumers can afford, they can understand, they can compare, and also claim without any friction. So if you ask me, there are three things that matter the most, but it's very important that all three move together rather than one at a time, because you spoke about inclusion, you spoke about insurance by 2047 for everyone. And the three things are very simple, and it's easy to crack the code, but to be honest, easier said than done. So one, we need affordability. India needs products for the households who can stretch to say 3,000, 5,000 rupees. It doesn't really need products for the urban population who is already insured. India needs products which are simple, where our consumers can understand the product at the time of sale and not really discover it at the time of claim, which really leads to frictions and conflicts. And third, and the most important, I think, pillar is the cost of delivery. We need to make the acquisition cost, service cost, compliance cost, claims cost so low that a small ticket size product can become viable for the industry. Because if we try to fix for affordability without really trying to solve for the cost of delivery, the products become unviable for the industry. At the same time, if you try to fix for the simplicity without really fixing or solving for the affordability, then it becomes, a product which the bottom of the pyramid cannot really buy. So I think all three have to move together if we really have a vision of inclusion and having insurance for everyone by 2047.
Mr. Mantri.
Yeah. Good afternoon, and thank you so much for having us part of this discussion. And quite rightly, Nidhi, as you said, insurance does not get spoken that much. Frankly speaking, the job that I'm in, I keep hearing insurance and insurance. So this is a sort of dichotomy that we live with, but the outside world, the gap exists. To be very candid, from an India perspective, anything that you put on per capita, and each one of you will agree, it comes out very attractive in terms of potential. But the journey is very arduous, and it can take significant effort. We also know for a fact that millions of people transit from low income to middle income to high income, and so on and so forth. So prosperity in general is going upwards. To give you some perspective on data, 2001 is when private sector insurance was born. Till that time, till 2000, it was only PSU that were part of it. Now, what was the size of the market in 2001? We are talking of 10,500 crore. That was the whole size of the market. But more importantly, the data which is very interesting, what was the per capita of India at that point of time? Per capita was $450. And I'll come back to in a bit. Now you go fast forward as we close the last financial year, insurance sector was 3,37,000 crores. That is the size. 10,500 crores had only 500 crore of health insurance. Now health insurance is the largest segment as things stand. So there's been a significant movement of what the industry has led to. The 4,500 crore per capita income has moved down to 2,800 crore as we speak. There's a strong linkage between per capita and the penetration of insurance. They call it the S curve. As income levels rise, the ability of individuals to indulge in this, while this is not a discretionary product, and as we aspire for more, it becomes very important that we also aspire to protect what is earned. These people who move, one accident, one hospitalization, one fire can take away everything that is there. The challenge is purely driven by frequency. How does it pan out? A risk which is visible, the tendency is that let's seek cover. But the irony is, at a point of time when the risk is devolving, it is not possible to get that cover. Are we prepared enough? I'll give you one very quick example to make my point. COVID led to one significant event. I follow sports closely. In 2022, Wimbledon got cancelled. The tennis tournament got cancelled. And they had taken what they call event cancellation cover. And they got paid everything. Of what almost a payout of $150 million got paid out at that point of time. For 17 years, as the discussion goes, there was always, why are we paying event cancellation when there is no chance of this event ever getting cancelled? There was never, every cost discussion that used to happen internally, the point that was always being made was the fact that there is no purpose. Because the remote possibility, however small, still existed. Thanks to their planning, they continued to pay their premium. And when the show cost, and actually the show time came, this is the payout that happened. The larger point that I'm trying to make is, it's very difficult to predict. And as we see things changing for 1 billion Indians, the topic that we have today in terms of our coverage by 2047, If you ask me, the interventions that are happening at this point of time for an aspiring Indian in terms of where it stands, as the purchasing हम जब ग्रो कर रहे थे भाई रोटी कपड़ा और मकान के आगे सोच भी नहीं सकते थे. Insurance was not even a point of discussion. The maximum our parents would teach a person like me is, बेटा savings करना आना चाहिए. From saving to moving to from a consumption-based existence that we have now, these are all transition phases of it. And I honestly, truly believe in a forum like this, when the discussion takes place, the reality is not for all of us who are sitting in the room. It exists far bigger way outside the room, and that is where the penny drop moment has to come. And some of the things which we need to do as an industry and collectively we need to do at a nation level will become very, very pertinent. Thank you.
Right. So that was very thoughtful, and that really set the context of this discussion. Ms. Kohli, I'll start with you. When we talk about insurance for all, and especially when it comes to life insurance, and especially Mr. Mantri was also talking about post-COVID, there is a little bit of awareness that has gone up. People have started thinking about protection, and we in the industry and media, we do understand that term insurance, is the best of all. So what does the industry really need to do to rebalance its product mix and make this conversation mainstream?
Sure. So maybe I'll speak about term and Sanjeev can speak about health. So if you look at life insurance industry largely, industry has more often always focused on growing average ticket size rather than growing the number of lives that need protection. Term, if you ask me, it's not a hard sell. The product doesn't have an issue. It's an amazing product. In fact, every Indian household needs protection through term. If you ask me honestly, it's a distribution issue. Today in life insurance industry, often products like savings linked or endowment or ULIPs, these have much higher price points, and for distribution it makes more economic sense. And unfortunately, term cover takes a back seat. It gets automatically deprioritized at the point of sale. So if you ask me if term has to become mainstream, it has to become the compulsory first life insurance product that should be sold to a household. This is number one. Number two, if it has to become mainstream, which our country needs, it has to move towards simplicity, affordability, as well as trust. Simplicity will come if we make the term buying journey simple. During lunch outside, we were talking about, we are trying to do a project with the hero team that, they have so many two-wheeler customers and most of them will not have a term product. To be honest, nobody will sell them a term product because unfortunately industry is not interested to sell a small ticket size product because it becomes unviable for them to reach. They have a beautiful distribution, so many customers, and we've been speaking about it, I think, from the last 1 month, that how do we ensure that through our dealerships, these consumers, these customers are given a low ticket size product. You know what the biggest challenge is? That today the regulation says that this product needs KYC. Now the question is that for somebody who wants to buy a 2,000, 3,000 rupees insurance, you want to unnecessarily add friction disproportionately at the time of sale. So I think simplicity is really needed. At times, regulations also have to change on the basis of the ticket size we are trying to sell. Second, as I mentioned, is affordability. I think I mentioned that cost of delivery is a concern, and until unless we bring that down, it will not become viable for a consumer to buy it. And third, I think, is trust. If you look at life insurance industry, though the focus is a lot about speed of settling claims, but somehow, unfortunately, many households in India still feel that the claim will not be paid. So I think the industry needs to do much more to build that trust and have much more awareness towards the nominees that yes, the claim is paid. The industry has very high settlement claim ratios.
Right, Kohli. Ms. Kohli. I wanted to ask you, you go digital in group insurance. Do you think putting life insurance as part of the group insurance, sensitizing more corporate, so to say, could that increase the uptake of term insurance?
So most corporates, especially large and mid-size, do take term cover. Typically, they buy term cover along with health, say 2 time, 3 time. I think the issue, as I mentioned, is at the bottom of the pyramid. This is the area. So again, taking an example of a two-wheeler customer, he is at the highest risk when he is driving a two-wheeler on the road, and protection from term is something which his family needs. So I think, yes, people who are employed by default get a term insurance from their corporates. The middle segment does buy it, from their agents and broker. It is typically the bottom of the pyramid that needs attention and focus.
But the irony is, on the simple maths, people do get a group cover on the insurance side. There is no confusion. But what has to be understood is group cover is not same as what you pick up yourself.
Absolutely.
Group stays with the job. There is no individual underwriting. But we had a case where a very senior banker who was retiring from ICICI Bank, and at that point of time asked me that मेरे पास medical cover नहीं, I don't have an indemnity cover. Sanjeev, just get me one organized. But by the time he was retiring, he was not worth underwriting, right? There were obvious challenges in terms of the health that the person had procured, and it was a big struggle to say no. And this confusion can happen to the best of the best, because we also believe on a going concern basis, we also believe हमारा corporate job भी चलता रहेगा, but everything has a terminal end. Similarly, on term, there are two paths that I've seen. One is that is grossly inadequate to the life and the lifestyle you have, which in the event of you not existing, family can get significantly impacted with. And secondly, the intent of the individual involved. So there is, see, we all felt very vulnerable in COVID times, and you could see a major spike. But at that point of time, when that vulnerability came, it also came with a mathematical model where the price increased significantly. So your ability to pick individual cover, whether on term, which Jasleen is speaking about, or on health, is on a steady state basis. This is the investment that you incur. And eventually there are term policies available that by 60, if nothing happens to you, your income status is fine, you can buy a term with a very definitive period and let that expire. On indemnity part, as far as health is concerned, I will presume that you don't need an expiry also. Because if there's an hospitalization, it can have significant challenges. And if every year, almost 100 million people move below poverty line, only on account of health, out-of-pocket expenses that goes out. These figures are staggering for all the good work we do, and then one event pulls it back. So something on a systemic basis should happen. There's Ayushman Bharat, the cover that is provided. It's a landmark cover where the minimum coverage is moved to 5 lakhs. Now that's a big movement if you ask me. However, still that is inadequate and not serving the purpose. So look at the inflation that we are talking about. So on health, I can keep talking about. The larger point I'm making is nothing should be taken away in terms of personal underwriting for you and your family vis-a-vis what you get from the corporate side, because that will go away with the job, and there comes a point of time when you don't have the job.
Right, absolutely. Since you were talking about PMJ, Mr. Mantri, which comes under Ayushman Bharat, it covers millions on paper, but private insurers have a really limited presence in that area. So is there a viable commercial model for private capital to meaningfully serve that segment and make a difference?
Yeah, absolutely, Nidhi. I think each one of us can have a role to play. On the PMJY part, as things stand, it's a tendering part, and in any tendering processes where there's a price to be quoted, we may have a particular risk and a price attributed to it, and we may not end up getting it. So it's not by choice, it's by sheer design. We all participate, and we don't win it up. But private sector has a significant role. As I was saying, even that 5 lakh cover which is there is very inadequate. So the top-up part of it that comes with it, we can also step in and do what is required. And there are almost 450 million availing it. Thousands of crores get paid. There are hospitals, there are 36,000 enrolled hospitals. Quite a few of them are private sector. There's so much action that is happening in terms of spreading that awareness. However, on a private, it's not by design. It's also by the sheer fact that it moves in a very different direction.
Ms. Kohli, you want to add?
I just wanted to add, because in PMJJY, there is one issue. The issue is of continuity. So if you look at the states keep moving from a trust model to an insurance model, and this frequently changes. So for any insurance company to invest in capital, to build up, say, the hospital network, put technology or manpower in place, there has to be certainty about continuity. I think this is one of the key reasons here. And second, as Sanjeev also mentioned, price is an issue. There needs much more transparency towards premium. Premiums should ideally increase or get refunded or adjusted on the basis of claims and not just on a basis of a one-year tender. So I think there are two things which can actually solve for the problem. One, these annual tenders have to move towards long-term tenders so that industry is able to invest in it on the basis of certain certainty that it's a 3-year or a 5-year sort of a tender. This is one. And second, another way of making it manageable also is that if we move towards a pool structure, where all companies pool together and anyone who's interested and willing can participate in the pool. This makes it more certain, more manageable, and more long-term.
That pool thing is really, really interesting, I think. But another related question that I have, and I'll pose it to both of you, whoever wants to take it. There's also a crisis of the, what do I call it? I'll call it the missing middle. There are people who are not eligible for PMJ because they are above a certain pay grade. But they are not at the level where they can afford adequate insurance. And you guys were talking about how important it is to have adequate insurance and not just insurance in the name of it. So what are the solutions for that?
See, insurance in a way gets driven by economics of large numbers. Anywhere where the selection is on a selective basis where few come in. So just talk about the size of the markets as it stands. I spoke about almost 450 million people are there under the government scheme. Under the group health, which is the employer-employee scheme, we are talking about more than 500 million, 50 crore and thereabouts. But the moment the number comes to individual stroke family insurance, it goes to nothing more than 60 million. How small is that as a sample? It's very, very important with its penetration of just 5 to 6%, the risk gets distributed among very few. In that itself, there's nothing wrong in admitting the fact that it's a triangulated process between payers, which is insurance companies, there is customers and there are hospitals. On the triangulated basis, the challenge continues of distrust. In a very tricky situation, and by the way, this will happen in any market where you are moving from a developing to a developed scenario. It's not very difficult to envisage it, but the trust factor is missing, consequent to which we end up facing multiple challenges. As an industry, last year itself, we must have paid almost 1 lakh crore. However, the narrative that goes on is कि कहीं ना कहीं insurance वाले move away when the need comes in. And it's a significant challenge. A lot of initiatives which are being taken over last 2 to 3 years, and all initiatives, each one of you will agree, if they're just from the point of start, there is this feeling, इसमें तो कुछ होने वाला नहीं है, right? But we are trying to see if we can pick up empanelment at the industry level. We are also trying to work with the hospital at multiple levels. They have their own set of challenges in terms of managing their own profitability. But in this whole equation, the customer gets shortchanged. I mean, I was reading a recent study which came in, which said that almost 44% of the industry's elective surgeries that happen are excessive and not warranted. Now, that is a chaotic number to live with, right? Where you trust yourself, and that's what I've been seeing in every single forum, that you trust yourself. And as a payer, I'm just doing a role. In the end, all we do is rush to the hospital to seek aid. And going more pointedly to the missing middle that you're referring to, I think it will be a combination of affordability, accessibility, and at some point of time, purchasing power again will come into play. So on the priority list, this has to get pushed. And when the government took this step in September, where they said that there will be no GST on insurance per se, I feel it was the biggest landmark event to put across the fact how important it is to get yourself insured. I have not seen an intervention of this magnitude ever. And since then, we have seen very significant tailwinds which are coming into play, where more and more families are buying insurance. So there is a fair amount of positivity that has come in. we all of us, including us as an insurance industry, will have to do what is required to get this transition of missing middle which is there fulfilled over time, and the 2047 piece that is there where insurance for all is being spoken about can actually become a reality.
Right. So definitely there's a gap that needs to be captured. Coming to motor insurance, Ms. Kohli, third-party motor insurance is facing certain challenges. There is, structural challenges on profitability. EVs are coming in, so repair cost, rising fraud, which is happening everywhere and here too. So how do you think the industry can rethink its pricing and underwriting architecture to really remain sustainable, because it's a key part?
So I would say motor insurance now can no longer be treated as one homogeneous pool. The risk is changing, and it's changing very, very fast. You look at vehicle types, geographical mix, usage, driving behaviors. With EV coming in, this component of batteries, repair cost, fraud to some extent, all of this matters. So industry can no longer now price on those traditional assumptions. One has to become even more granular and sharper when it comes to pricing and underwriting. EV is a great example which you gave. So if you look at EVs here, the repair dynamics are very different. The battery, electronic components, if they change, the severity of the claim will automatically change. So insurance companies will now have to keep up pace with this change of technology. Otherwise, the whole segment becomes unsustainable. Third party is an issue. It's been 4 years that the premium rates have not gone up. It's a tariffed product, and insurance companies do not have freedom to, freely reprice this. Now, what is in our hands is that we can underwrite it more selectively. We can manage our portfolio better, and continue to keep pushing the regulator for price advocacy. I think industry is making continuous representations around it, because there are segments in third party which have actually now become unviable. The wage rates have gone up, courts have become even more liberal, and the premium, to be honest, is not really sufficient. Fraud is a reality in our industry, and I think fraud is something which has to be looked at multiple points, at not only just at the time of claim. So there are now, with help of technology, a lot of tools which industry focuses on. So AI today helps us to do some risk assessment at the time of onboarding, or through analytics one can build fraud patterns to ensure that the fraud is mitigated. But fraud is a reality, and unless we fix it, it becomes very challenging for us to continue forward. There is just one point on motor, though not relevant to the question, but I would still want to speak about it in this forum, is that if you look at motor third party, it's a mandatory product. But unfortunately, in our country, still so many vehicles ply on the road without a valid third party insurance. Now, when this vehicle meets with an accident, it's the society actually which pays. Now, insurance companies have a pool from where this money goes. So I think stricter enforcement around it, it's a mandatory product, will actually support the industry as well as society at a large.
Right. When we're talking about frauds, in medical insurance, there is a twin trouble of frauds and medical inflation. So how does the industry plan to tackle that?
Medical inflation, ability to tackle. I think some part of this I covered. I'll just give a bit on the motor part of it, because that is another significant, contributor to the insurance industry. And regulatorily, life insurance is all push, because there's no necessity for you to buy. But motor insurance, regulatory is supposed to buy. Still, as Jasleen said, 50% of the vehicles which ply, primarily most of them two-wheeler, end up being not insured. And that is the reason why almost 8 years back, through Supreme Court, it came out that you need to have 5-year third-party insurance for two-wheelers and 3 years for private car. But look at the billion part that we're speaking about, the per capita that we're talking about. India is selling around 4.2 million vehicles every year. That is what roughly the number is. Two-wheeler, we are among the largest, and it's almost 21.5 is what we are talking about. 2 crore se zyada hum two-wheeler बेचते हैं, and CV 1 million plus and thereabouts. Look at China. China is selling almost 40 million private car which is 10x of what we are selling. And the penetration of EV is almost 50%. And I'm sure each one of you sitting here believes that the aspiring Indian will see more and more private mobility as a way of functioning. We see multiple speed, highway, all of that, multiple controls, digital controls, all of them are coming in play at the same time. But the significant challenge is the Indian roads, Indian drivers are still not ready to operate in a disciplined manner. And that keeps putting us in a circle, which is a virtuous circle in terms of pricing it. You'll be surprised how we from our lens, what Jasleen also spoke about, end up viewing it and seeing how difficult it is to manage third party from our angle to end up covering it. And the movement that keeps happening keeps making us finite in terms of picking up where it is viable. And then there can be court cases which can change the whole economics of existence. Simple rules like unlimited liability. I mean, today also we'll have a fresh intimation of an accident which has taken place in 2005, 2001, and we have to admit it and honor it as a company. In a way, from a customer angle, it's still fair, but naturally our ability to cross-examine and inspect gets marginalized. On the health fraud that you're referring to, health is a triangulated confusion that exists between us policyholder and providers. The reality is, all of us are not in the clear when it comes to managing health insurance. It's a very, very candid submission. As a payer, which is insurer, we believe there has to be standardized procedures. There has to be a protocol which should be followed. However, scant respect is put to that, and that enforcement does not get taken place. From a provider, which is hospitals, they feel that everything should be paid seamless without any question asked. There's enough data available that people who have insurance cover have longer stays and are multiple times expected to go through procedures which otherwise not required. Now, classically, if all of us are there as customers or policy holders, we'll have a serious issue and questions getting asked that insurance policy should help you, not make things much more difficult for you when you go for treatment. So each one of them is very strongly placed. But मेरा ये मानना है कि अगर health insurance करना है, and that is the way we talk about it within ICICI Lombard, I don't want to be a seller, I want to be a customer. The processes, the way, and that's the way I've been also talking to all the hospitals. The only way I will see it is a customer. Because when we go to a hospital for a solution, we surrender lock, stock and barrel. We are so vulnerable at that point of time. It doesn't matter who the payer is, which is insurance company, or for that matter, who the provider is. हमको सिर्फ solution चाहिए होता है, and the purity of purpose at that point of time should exist. Our company, they keep saying, right, we settle almost 98% of the claims within the parameterized period that is given. To me, that's not a solution, because even 2% justifiably is taken away. It is someone at the hospital who had a problem and who's not been able to solve it.
Right. So, with so many challenges, I wish I had more time because there is so much more to discuss. But I'll just pose the last question, which relates to the topic, and which is, what will it take to crack the economics of universal coverage, since we're talking about insurance for all? And both of you, please.
Sure. I spoke about it, I think, at the beginning of the topic in itself, that 1 billion insurance can become a reality only if we solve for all three problems together. Affordability, I think we spoke about that companies who have corporate insurance, there is PMJJY, the missing middle is missing. So I think affordability is a topic which we need to crack for. We need to design products for the missing who can stretch and pay 3,000, 5,000 rupees and take their insurance. Second, I think, is simplicity. Our industry is extremely complex. I think designing simple products will solve for it, because today, unfortunately, most of the customers realize what they have bought only at the time of claim. And that's the reason there is so much noise and there is so much friction. Third, I think cost of delivery has to go down, whether it is cost of servicing a claim, cost of compliance, cost of acquisition, everything has to go down. Only then the price point can go down and everyone can afford for it. So all three components have to work together and not just one at a time.
All right. So, Mr. Mantri, slightly, is the industry moving towards it?
See, anything which remains exclusive will struggle. The models have to become inclusive. The point that I just got put across will only happen when inclusivity comes in. We know what happened when mobile came in, right? 16 rupees a minute, incoming, outgoing, getting charged. Today there is no existence, and the model suddenly converted into from exclusive to inclusive, and it's exploded. Look at the UPI payment that gets done. Billions of payments are happening at speed. The digital literacy of the country has changed. And trust me, when it came in the early, late 90s, when we were talking about mobile, I never thought that it will change India in a multiple, in that kind of a landscape. The AI ML part, which we have not spoken, but there's a clear intervention that is available. The amazing part is the juncture that we are sitting in this country, and the tech interventions which are happening through the digital stack, and even things like Bima Sugam, the site that is coming up, which is there to democratize the whole insurance bit in a very, very significant way. And these are all getting judged at a point of start, but the moment this revolution starts, it will fructify. We've all seen, eventually, whatever be the forces, what is right in the consumer mind does happen. It can take summation of time period, but eventually it will happen. I believe the movement that exists on the insurance part also, it's moving in the right direction. As the practitioner, it does subject us, and as a receiver of those services, each one of us are receiving those services, we do go through points of frustration, but directionally every reason to be optimistic and see that these building blocks which are being put in place will transform insurance sector. We have not spoken about the IIV. Why has banking changed? Banking changed because bureaus came into play. Trust me, when I got into banking early years of my life, retail lending was the most tricky thing. But now bureaus have transformed and retail lending has become the way forward because of certainty, the power of N, knowing each customer and his conduct has changed. But that's not the way insurance is done today. No one knows that Sanjeev Mantri is a good customer or a bad customer. And I want people to know those indexes will come, those measurement tools will come. And then your ability to price risk as per the underlying subject, which is Sanjeev Mantri as an individual, will come into play. And that is where you will see this transformation. And the current interventions are allowing us to treat masses with individual classes, the power of N. So I'm very optimistic that things will flow in the right direction.
So definitely on that note of optimism and hope for transformation, we end the session. But I would like to take some questions if anybody has for the panelists.
Although there are laws and guidelines and orders from Supreme Court to give insurance to persons with disabilities, but insurance companies don't give insurance to people with disabilities, and there is no any evidence like people with disabilities get more accident or like that. If you have any proof, so please let me know. But companies don't want to give. Even in my best of knowledge, Ayushman Bharat Yojana also don't give. The people with disabilities are not included in that. What is your opinion in it?
No, I think it is very clear. We all have products for that. Specific in terms of what you're referring to, we can obviously get into the detail, but there is nothing which says that we don't give it to them. In fact, mental illness also is covered. The products are pretty comprehensively available, and regulatory and otherwise these products are available. But if you have a personal episode in terms of what you have to discuss, we can discuss that definitely.
Yeah, that's true what Sanjeev said. In fact, our regulator now mandates all insurance companies to provide insurance to people who have any kind of disability. You may want to go and check on the insurance websites. I think it's available with everybody now.
Okay, thank you so much. Time is running out, so one more.
All right, a quick last question.
Quick last question.
So I request you to please.
Hi, good evening, Jasleen ma'am. I'm Joydeep Hazarika from Shriram Life Insurance. So my question to you is, Digit Life being one of the digital first life insurance company, what is your take on the digital channel, where you just mentioned about the cost of delivery, the cost of customer acquisition, these certain things which needs to be controlled for better profitability and obviously for the expansion of the insurance sector. So do you think, means, because I've worked in different companies like Lombard and Kotak and others, so there we have seen that the time taken for a digital channel to grow, it's really, it's taking a lot of time, and it's not going, the rate of growth is not happening as per the expectations. So what is your take on this, and how we can actually bring about measures to bring about development for the digital channel?
So my understanding, when you say digital, you're talking about digital direct, which is...
Yes, web sales and digital
yeah,
partnerships.
Okay. So I think our country is still very far away where digital channel becomes the largest. I have two takes on it. Number one, I think most insurance companies are now moving towards digital first. When we say this, even if today when we work with our distributors, digital is the infrastructure. So this is one. I think Indian consumers are still not ready to go directly and purchase because insurance is complicated. When it comes to motor, yes, one still sees some traction on the digital direct, that consumers come and, at least check the price. But for complicated products like, say, health or, say, a savings product, our consumers still need a distributor and an insurance, which is good. And it'll take time for digital to become the channel. Like, even in Digit being the digital first, I think less than 1% of revenue comes from there.
All right, thank you so much. We close this session. Thanks a lot, Mr. Mantri and Ms. Kohli.
Big thank you. Big thank you, Mr. Mantri, Ms. Kohli and Ms. Sinha, for helping us unpack the opportunities and challenges of the sector. I request you to please get together for a group photograph. And I would like to request Mr. Sunil Kant Munjal and Ms. Shefali Munjal to please join us on stage to present a small token of appreciation to all our speakers. What a session, unpacking opportunities and challenges on our road ahead to 1 billion insured in India. Ladies and gentlemen, let's give them a big round of applause. Thank you all. Thank you once again. Thank you, Mr. Munjal and Mr. Fali, for doing the honors.